because the reality is that all debt-based currencies lose value over time. And it's not like this has never been tried before. It's been tried over 4,800 times, and it'll be tried again as well. But inflation is part of the design because governments wanted to tax you without you knowing about it, so they didn't have to go through legislation. And you've heard, I'm sure you've heard of the almost invisible inflation tax. And corporations wanted to pay you less. So they knew if you were used to $10, you weren't going to accept 5, but if you could make the 10 spend like 5, voila. So this is the system that enabled that income and wealth inequality, which is even wider than it was in 1928 before the 1929 stock market crash. So really, we're just experiencing a repetition of history. These are just some currencies that used to exist, fiat currencies, that do not exist anymore. Make no mistake about it. You know, all fiat debt-based currencies go the way of the dodo bird. They just go away. They get hyperinflated away. And the only difference between inflation and hyperinflation is the speed of that inflation. So if they can keep it at that 2% level, then you don't realize it and you don't complain and you don't ask for more money. But the reality is that they are still robbing you of your work and of your wealth. And especially if what you're trying to do is count on the wealth that you're accumulating inside of this system for future use, for education for your kids, for retirement, for safekeeping, a safe haven asset. This dollar is not a safe haven asset. Neither is the yen or the euro or any of that, because every single one of them are losing purchasing power. Unless you think, well, Lynette, that doesn't look so bad. It's kind of, even out there. Well, this is what it's been doing just since like 2004, right? There's only officially 3 cents left. That's official. And you can see it is absolutely relentless, that downward pressure. Where you see it happening more quickly is that fast inflation, that high inflation that we've been experiencing. So frankly, the single most important way to value any currency is what it will buy you. Doesn't matter how many you have, it's what it will buy you, especially over time. So where my personal strategy used to be at the end of this mess to convert into the new currency with the advent of the CBDCs, no, I will convert it as I need to use it. Because if I do convert it sooner, whatever I do convert, I have to accept the fact that it's going to lose value very rapidly. So I'm going to convert it, pay off my mortgage. I'm going to convert it and buy something with it. That's the way you treat it. If you like this clip and you want to watch the full video, just click right here. And to subscribe, click right here.